The president has a good trip, the stock market continues to move to new highs, and Bitcoin moves to the stars. All that and more as we start the show.
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week and a look forward to what might happen in the next week. And hopefully lots of great ideas and opportunities for you throughout the show. Well, the stock market continued to roll on the upside this week, moving to new highs, again led by the NASDAQ stocks. Stocks recovered from a big hit just a week ago Wednesday when they fell almost 2% on the news that ex-FBI head Comey had a memo that suggested that President Trump had asked him to back off on the Russian probe. Headlines, though, improved this week as the president had this successful trip in the Middle East and in Europe and got himself in front of some 85 leaders. That was really, well, a strong trip with strong messages and great optics. And that seemed to at least temporarily cover up the issues back at home for now. The defense deal that he put together with the Saudis, well, that spurred the defense stocks moving on the upside, which then joined the technology stocks, helping to lift the stock market. But soon the president will be coming back home, and then he has to face the realities of what's going on here. And that is looking like his budget that was just released has like no chance of getting passed at all. It's just way off on that dynamic scoring, which says that we're going to have over 3% growth on average for 10 years is total bogus. And so that can't happen. The health care plan in the Senate essentially has got so much pushback from both sides that they have to start rewriting that from scratch. And the tax plan is really dependent on all of that before they can really get that done, because they have to do it with only a 51 vote, and that's going to be even quite difficult. So in order to be able to do that, they have to get the numbers just perfectly in line, and it certainly is doubtful that they will be able to do that. So he's got plenty to deal with when he gets home, and I think that we're going to see the headlines changing again before you know it. Stock market, well, the NASDAQ gained 2%, just keeps trucking along. S&P 500 up about 1.5%. The Dow Jones and the Russell slightly weaker, but still gaining around 1% on the week. The Russell continues to be the laggard on the upside. Bond market, narrow range on the week, not a whole lot of change. The dollar had a modest bounce. We expected a modest bounce, and we had said that the euro currency was likely to pull back because that had gotten overbought, and really that's both happened, but in a very small way. Gold and silver are getting stronger, and silver is showing even more strength. Now, gold only up a couple bucks on the week, not that significant. Silver put on a strong gain, about 40 cents on the week, and we for our members, when they see our short-term view, we're going to talk about the potential for much stronger gold and silver going forward. We're going to mention oil stocks in our worst of the week coming up, as oil down about $1 on the week. It gained early into the OPEC announcement as expected, and then was truly disappointed by what the announcement was. There were whispers that OPEC was going to not only extend their production cuts, but they were also going to increase the cuts. And they didn't get that at all. In fact, that the countries that were not included in the cuts last time, they expected those countries to be included this time, and they haven't even done that. And they just know they're up against a huge production in U.S. shale and the competition there. And just based on everything we see, the glut remains, and oil reacted quite sharply on Thursday after gaining during the week, falling about 5%. It was a big loss then on Thursday in that disappointment, and then oil came back a little bit here on Friday. Bitcoin, they're unbelievable. This week had a bull and bear market in Bitcoin. They had massive gains during the week, rising from some 2,000 to 2,755. So you could see that was better than 25% gain on the week at one point, and then falls almost 20% in one day to about 2,200. So bull market, bear market all this week in Bitcoin, and settling out somewhere in the 2,400s. It moves so fast you almost can't keep up with it. So, when you look at the Bitcoin movement, maybe it's a flight out of fiat currency. That's what it sure looks like to me. Like nobody really knows what the answer is to this buying that's going on right now in Bitcoin. It just looks like nobody wants to hold cash money. And, if you extrapolate that over to the stock market, maybe people don't want to have cash money, and so they're just simply buying stocks so they can hold on to something of value. That's probably why gold and silver may be ready to move pretty good on the upside. So maybe, they don't want cash. Well, they would rather have something real, and maybe that's what's going on here in Bitcoin stocks and everything else. Our expectations were that previous week's technical pattern, that big bear kicker, was going to move the market down this week. We thought it would get a bit of a rally and then fail, and that certainly proved incorrect. Even the best of patterns and kicker patterns, for those of you that are technicians, are really strong patterns. They really give you a high probability of success in both directions. Well, maybe in this case, that big downside move was just a shot across the bow. I've been in this for 43 years. I've traded some 9 bulls, 9 bears. I've traded many crashes. And I've seen moves like this that all of a sudden end abruptly when it seems like there's nothing that can stop them on the upside. I believe that because of the internals that we see in the market and the low cash in the hands of fund managers and huge margins, all the things that we've talked about in the past, that the fate of this rally won't be much different. As a matter of fact, this rally, which really comes from February 2016, this leg of the bull market, which is of course some 8 years old, that's about 15 months off of that bottom. That's historic, actually. It beats a little bit the final rallies in 1962 and 1987. Both of those, of course, brought crashes of some 27 and 43% after those rallies were over. Even if the central banks or the PPT, that's the plunge protection team, or the BTFD, that's buy the freaking dip traders and investors out there, think that they can hold the market up in here and that all of this just keeps going the way it is, market cycles, they don't go away. They keep coming, and we have rallies and corrections, and like I said, I have been through a lot of them. Corrections have not been removed from the stock market, as maybe the central banks would like to think, because they think they have it all under control, and that having 0% interest rates, well, that solved everything. Well, it solved nothing. All it did was create a false sense of what earnings are. As a matter of fact, if you look at 0% interest rates and what the average a corporation pays in for their borrowings, well, it's extraordinarily low now compared to what they used to pay what they had to pay to borrow money. So they've borrowed a lot of money, of course, to financially engineer the prices of their stocks, and their earnings are greatly affected by that. If they had to pay, a normalized amount of interest rates for their borrowings, then earnings would be severely hit. And the markets will know that going forward as the Fed does get to some normalization. And what that means is that, well, it's an earnings bubble is what it is. If there's any bubble, it's an earnings bubble. And at some point, they figure that out, and they try to get ahead of it and sell stocks. And maybe a week ago Wednesday, that 1.8% is just a little whiff of what downside can bring here in this market. Let's take a look at the 60-minute chart of the ES. That's the S&P 500 as I get that chart set up for you in the screen. And, of course, this shows you what happened overnight and during the day. And what you can see here is that, well, the market has just simply trucked its way on the upside all week long. What an amazing week after that big week, a big decline a week ago Wednesday, and look at this as it continued up, and then on Friday it goes into this tiny little consolidation, and even now you can see what looks like a little bull flag forming right in here, right? So everything that you look at in here is moving on the upside, even at any kind of news that was scary, and this horrible news where 22 people were killed in that Manchester terror attack, that brought an overnight decline that the market survived, as they know that we survive all terrorist attacks. China debt downgraded right over here, and you could see that little blip on the downside, and the FOMC minutes brought a little bit of volatility right there, but the market was able to continue on the upside pretty good. Interesting, on Monday, Merkel came out and said the euro was too weak and criticized the ECB. I say yes to that, but Trump headlines were great out of the Middle East over the weekend, and defense stocks led that move on the upside. So we had a big update there on Monday. Tuesday, you could see the update in here also. POTUS unveiled his budget with huge cuts to entitlement programs. Sadly, he has promised not to deal with the two biggies, and in that case, we're never going to be able to balance the budget because we promised too much to too many people. And when you live in a welfare state like that, well, that's socialism, and socialism always collapses. So just have to keep that in mind. Wednesday, we had, of course, this move up and after the Fed minutes in there. Janet Yellen says the economy is doing well. June rate hike seems like it's likely. They are likely to start winding down the balance sheet in here. And she even talked about vulnerabilities from asset valuations. That might have been her version of, extreme exuberance. And, of course, the stock market only had a little blip in there. Bitcoin moves up to 2,400 there on Wednesday. Thursday, the markets again moved to the upside. China yuan actually helped move that up. I didn't mark that in there, but somewhere right in here is where the China yuan got an upside panic actually in there, and the E-mini S&Ps jumped also about 8 points in just a couple of seconds. So that was what led the market on the upside overnight, and that was the 6th day of the market surge as it came back from that 1.8% down day a week ago Wednesday. And you could see on here on Friday, U.S. GDP upgraded for the first quarter to a slow 1.2%. Good luck, Donald Trump, getting it up to 3. Home prices were up pretty strongly as inventories have remained low, and oil puts on a tepid bounce, and the stocks rest. Not a lot going on for the pre-holiday period in here. Our calendar for the coming week, you could see almost no earnings of any consequence in there. We get Coors before the opening on Wednesday, and Sienna Data General on Thursday before the opening of Vago and Lulu. Lululemon. If there is any news that's important coming out next week, of course, we're closed on Monday. Then on we get Thursday pushed off because of the holiday. We're going to have the ADP report, which is the private sector employment numbers. And then on Friday, we get at 8:30 in the morning Eastern Time, the employment situation, which is always a strong market mover. So that is a look at the calendar for the week. And that is our opening segment. And we're going to be right back with the best and worst stocks for the week. All right, this is where we look at the best stocks of the week. Generally, what we look at is stocks that have pretty good upside moves, and also maybe just stocks that have good chart patterns in there that give us some good opportunities. So by far the best stock this week is Best Buy, BBY. Best Buy puts on a really giant upside move as their earnings report was really good and their guidance was very strong also. Interesting in here that we had talked about in recent months that, well, not only did it have a bullish pattern, but also they were competing online better against the online sellers and certainly the big box stores, and that has improved things for them for Best Buy. This, of course, is in the specialty retail category, and take a look here as we put up the weekly chart of Best Buy. Here is that chart for you to see right there. So Best Buy gets this upward surge, some 16% on the week. Strong earnings, strong guidance. And for those of you that are students of cyclical analysis, you can see in here magnificent cyclicality. When you get, these are our colored phasing, so that shows you the rising phases and corrective phases. And when you get these really strong green, yellow movements in there, what that essentially tells you is that you're getting rallies and corrections that are positive cycles. In other words, ending above where they started and showing you that there is an uptrend going on. That's what happened in here. And the corrective periods, as you see right in here, brought only modest corrections. And then you got this acceleration to the upside on the earnings report. It's rejected a little bit now, and maybe $62 that quickly is just a lot for this on the upside, especially in this retail environment. We would expect a correction into late July, as you could see based on here, but that was an excellent chart in there in Best Buy. Take a look at TTWO, take two. Look at that movement in there. TTWO, a strong upside move, and you could see the cyclicality in this one. These are rather long cycles, but again, you can see the upward progression as each of these cycles were solid upside moves, and then the upside extension again. I mean, this just proves the value of understanding momentum and also understanding the value of upside projections. In fact, if I pick up the projection tool right in here, that's the fib extension, and I grab it from that important low to this high and then back over here, you can see that this move on the upside is approaching the 1.618%. It was very obviously getting over the 100%. So I did a video this week on doing these projections. So if you want to become a member, and if you're not a member, just write me an email, slim@askSlim.com, and I will send you a half-price link so you could get an idea of our videos. So you can get a sense for that projection in take two. Earnings a big beat, up 12% on the week. Very solid in there. Here is Square. Square is another good solid pattern. I mean, take a look at when investors want to be in these things for long term, they keep it moving. There is no news in here, and the only news during the week that I saw on this big upward surge was that there was strong call volume going on in there. So maybe call buyers knew something when you see that. But again, you could see a solid upward progression of cyclical patterns in there, and this calls for a correction to sometime in around mid to late June, maybe a modest pullback in there and turning up again. You could see our projection in there of the pullback and then moving up strongly to the upside again. We talked about the tech stocks moving and leading again to the upside. Of course, Amazon pushing up near the $1,000 number. The ones that are in our news this week are Into and Marvell and BlackBerry, essentially. INTU is the first one we're going to look at, and this one also surges on the upside. We're showing you stocks this week with strong upward cyclical movement that also have met upside projections. In this case, this was 100% projection right in there. It means that this advance right over here and this advance right over here are about the same. That upward projection, look at the 34-week moving average giving you support, and the beautiful cyclicality in there also. Again, we're looking for this to, and now that it's gotten into the projection area, rolling over soon into some sort of a correction as it's had a very big move to the upside. Marvell, MRVL, this was listed on our stocks, as was some other ones that we talked about today, as stocks that are extraordinarily overbought and that we are looking for pullbacks in. We showed those stocks yesterday afternoon on Thursday to our subscribers, so they have a list of them that we're looking for pullbacks in. And you could see in here are your big cycle patterns right in there. Note the flag pattern that occurred during this corrective period. That's a super bullish occurrence. There are also smaller patterns in here. You see this one right here? Well, there's a lot of clarity in that right here as it turns up again and extends to a very overbought condition. We are looking for a pullback in here also into the July period, as this one is extraordinarily overbought. Analysts have upgraded this one this week, and they have great cycle patterns, as you can see. Last one in this tech category that we talked about last week is BlackBerry. Again, no news on this one, but certainly a reborn stock. As they have moved into the security, internet security, which we know is so important based on all of the hacking going on, and that has really gotten a ton of interest in this stock. Note our projection in here. This is for a pullback into July. Man, if we get the pullback in here to like 10 or 10.5 into the July period, man, I think that it's going to be a screaming buy, and the stock could go from 10 to 15, I believe, based on the really strong sentiment that we see going on there. Next one we'll look at is in the retail category, and that is Deckers, DEK. This is a stock that really has surprised the street this week. They earned 11 cents. They were guessing they would lose 4 cents. So this is a great looking pattern in here. As a matter of fact, our cyclical analysis gave this one a tip-off because this was the end of the corrective period coming right over here, and it just explodes to the upside. So this is a week one on the upside. In other words, it's the first week of the advance. I mean, you could look at that as right here where it went up 2 more strong weeks, where it was right over here and went up 2 more months, as it did right over here. So this is very early in the move, and we think that Deckers is going to be a stock that you can actually buy when it pulls back. We're going to talk about the airline stocks right now. They had a great week as there was really no news in there. Maybe it's more about what they believe the prospects are for economic growth moving forward. Overall, this was a great looking group. I'm going to show you actually charts on 5 of them right now because I think that they're so interesting to look at. And the first one that we're going to look at is JBLU, JetBlue. This stock is in the group of stocks that are pretty extended on the upside. But again, we want you to see the strength and the cyclical patterns as our analysis really glows when we look at this. Let's just look at a little closer look right in here. And you can see in here that there are smaller patterns right in here and that there are bigger patterns right here. And here you could see the big pattern, and here you could see the small patterns as they're perfectly aligned with those cyclical lows. This is what we call a nesting of cycles right over there. And this is kind of a harmonic family of cycles when we look at it. So if you look at this big one right in here, it suggests a pullback into this period of late July or early August. Here's the small one right there. You can see that right in here, and the new rally. So pretty soon we're going to get into a period where it rolls over and then corrects, and then probably moves again. There's so much to me that points to a correction into late July or August that usually when you have that much synchronicity in stocks, it actually happens. Here you have American Airlines. You could see in here it moves up into this area of resistance right there. Same kind of a pattern that we saw, is that we expect it to move down into August into a correction. You could see that as far as our projections go. Take a look at Delta, DAL, also the same type of pattern. But really, when you see that this red zone created this negative cycle right in here, it increases the odds of failing below this level right there. That's below that 50% extension. So we would expect Delta to also move to the downside fairly soon and correct into late July or August. LUV is the next one in the group. Same pattern. You could see that right in here as it pops into the fib extension targets right there that you can see, and or just below it. So we would be looking for maybe just a little more upside, and then rolling over in Southwest Air. That one's got a little longer corrective period in there. And United Airlines is the last one in this group. We'll look at solid gains in this group, as we don't have United Airlines right there. Here it is, as that has a big gain. United Airlines up 4%, Southwest up 4% this week, Delta 5%, American Airlines 7%, and JetBlue 8%. Note the fib extensions right in here as it moves up into that projection area, and now likely to roll over. We think it won't do much better than about 83 and a half, and then roll over. And again, you could see the overlapping cycles right over here, which all project out into late July or August for United, Delta, and American Airlines. So this corrective period in these airlines is likely to come very soon. So as you could see, a lot of alignment there when we look at the airline stocks and corrections into July or August, and that speaks to the correction that we see coming in the stock market. All right, so that's the best of the week, and coming up now is the worst. For the worst of the week, well, I have to talk about oil stocks. In fact, I have to talk about oil because this is a good lesson right in here of the value of looking at sectors as a whole and extrapolating from the movements within the sectors. Now, if you're a member, you've known that I have, expressed some angst on my analysis in light crude, because the rally had moved up so strongly from that panic low under 44 back over $50 in a brief period of time. Now, during that rally, that oil moved up, and I'm going to show you that rally in oil right now, /CL. It was just a really powerful rebound in there, and what that gave us was a question as to what did it mean for the entire sector. Here is oil on the daily chart, and you can see what happened this week in oil and the last week. Here was that panic low. It gets under 44 and spends 2 weeks marching up here to 51.5, and then the big down day on the OPEC disappointment right there. But the focus really is on this major 2-week rally right in here, where oil had a very significant upward tick. So if that was the nature of the up move in oil, you would expect that the energy stocks would have really super rebounds, but they didn't. I'm going to show you that and show you the stocks that had the biggest losses for the week, and the fact that no buyers came in. I mean, it just was crazy that oil was marching up that way, and the energy sector was practically ignoring it, as if investors, well, they didn't believe that OPEC had any chance of manipulating the market up. Well, think about that when you think about central banks and our whole stock market. But the point, I got on a tangent there, I know. But the point in here is that, I mean, it's like investors really knew. And I'm going to show you in here as the drillers had a really bad week, and their number of rigs has been picking up. So I wouldn't be surprised if that slows down. The worst stock of the week in the 320 stocks that we look at was Neighbor, NBR, and I'm going to show you some really horrible patterns in here. So take a look here at this NBR, and we'll just focus also on the last 2 weeks. Trading, first of all, you can see in here the cyclic patterns right in here. The rally, the sell-off, the rally, and the sell-off, and the sickening small rally. That's this one right in here. And the breakdown under that important level, which made it negative. So the last 2 weeks, while oil had that surge on the upside, almost nothing here. A little blip on the upside and then breaking down to new lows. Our projected low, and I'll keep track on this, is July to August for these drilling stocks. NBR, a loss of 17% on the week. Noble Corp, NE, almost the same story. Look at the last 2 weeks while oil was moving to the upside. Nothing. If anything, it tried to rally and went down for the week, and then moving down to a new low also. Again, August is the projected low for this now only $4 stock, Noble Corp. Rig, RIG, here's the same story. Upticks in oil, no upticks in rig whatsoever these last couple weeks. And then the acceleration to the downside, the projected low in oil here in July, also in rig and in Diamond DO. These are the offshores. Look at that. Now that has our cycle phased colored in there. And so you can see that, well, you get an upside move, it's green. When it breaks under the moving averages, it turns yellow for a correction that actually equaled the low right over here. Pretty bad. Look at that horrible rally back a couple of months ago, and once it breaks that low right there, it turns red. And man, look at that, all the way down to July, August is the projection for the downside there in Diamond Offshore also. These are horrible. Halliburton down 5% on the week also, and it has a better pattern. So Diamond, Rig were down 10%, Noble Corp down 12%, and NBR down about 17%. Just a monstrous downside move. One more we'll look at in this category is Schlumberger. This was down 3% on the week. And as you see right over here, it is really in a horrible pattern that you could see right over there also, and also projecting to August on the downside and here based on these cycle patterns. And that shows you how bad something could be. That's only part of it, because all I really did was show you the drillers right over there. But as a matter of fact, the energy stocks, as far as the integrated oils, and as far as the natural gas stocks go, they were horrible also. Whiting down about 12%, Marathon down about 8%. I'm going to show you those just so that you can see what really weak patterns look like, and the fact that they were just screaming at us that this oil upside move, which we just said was bogus and didn't understand, just gave you nothing. Here is Marathon. You can see that Marathon down about 8% on the week. You can see did nothing in that 2-week rally and then breaks to a new low, again pointing to July as the period for the end of that decline on the downside. Whiting, WLL, sometimes I skip this one and then I get emails also pointing to big moves to the downside, as that one now has a breakdown. In the natural gas category, here is Devon, DVN. That one negative, pointing to July, as it has had a break to the downside. In Devon, Apache, APA, another one that is already in a negatively configured pattern, pointing to August. On the downside, you can see the overlapping patterns there in Apache and Anadarko and Devon, the natural gas stocks. Take a look at APA. Actually, here you have APA and you saw Devon. Take a look at Exxon, XOM. You can see this one. This one not broken down yet. Actually got a little uptick blip while oil went up. If you see Exxon down under 80.30, you know that that has broken to the downside. That's not far. It's holding up because it's part of the indexes. a heavy weight in there, and because the stock market's moving up, it stays strong. So you can see in here just extraordinary weakness in the energy sector, and that blip on the upside in oil didn't help it, and any more blips on the upside in oil likely not to help it. It would take a move over $52 in oil in order to, I think, affect this at all, and I think that is not a very strong likelihood. All right, other stocks that had a poor trip this week. Why don't we look at Trip? This stock has been in a negative pattern. We have had it as negative, and it continues to move to the downside in there. There's an interesting pattern here on the daily chart, which I'm going to show you, but what I want to first do is illustrate the negative pattern in here. We talked about a lot of those oil stocks that had small rallies and then breakdowns under their cyclical lows and how they extended to the downside. Well, this one measured to decline out into June, and you can see it's continuing to do that right now. So there you get a sense for how timing is so important using this school of analysis, which is cycle analysis. Here you could see the daily chart. Now this is so interesting. As you see here, it failed at the 89-day moving average right there. It got through it, but left an abandoned baby right over there and continued to the downside. Downward momentum restored right over there as Trip tried to get up on its earnings report, but then tripped up and then moved strongly to the downside, losing 11 points since that high in just 2 weeks. Just an amazing move to the downside, and a bad looking stock. We have a few stocks to look here in the retail category that also had a bad time of it. First one we're going to look at is GameStop, GME, which moves down 10% on the week, and strong looking patterns in here that are suggestive of more declines. The problem with GameStop, now, they actually beat on earnings, but their pre-owned sales, which is a pretty strong piece of their business, was very weak, and that's why it moved down. Now, the pattern is suggestive of here that it moves down into July. How many times have I said that in these last couple weeks showing stocks? There is so much synchronicity that there's a market decline coming into July. It's crazy. Take a look here. When you look at this pattern right in here, interesting, when it made its ultimate top, it made this evening star right over there. It was a double one. There was another one right over here. Here's your pattern right over here, which is an engulfing pattern, which makes that high, and then it gaps to the downside on that earnings news right there. And as we said, we think this stock will continue to have trouble. Those big high volume downside gaps usually start something on the downside. So that's a bad looking pattern. Tiffany, we talked about the fact that we didn't believe that this one was going to be able to withstand the problems in retail, and sure enough, look at this thing turned down. Now you can see our projections in here. Based on what we're looking at, this looks like end of May to early June before this decline is over with. Now note, 34-week moving average gives it a little bit of support right there as it comes down and bounces this week. We expect another couple of weeks potential move on the downside, and then as we get into this rally phase, some false rally that completes probably a head and shoulders top being formed, and then moving to the downside in a very significant way. We think that is the beginning of the end, or the end for this stock. You could see in here the head and shoulders pattern that is formed. They missed on their sales, and you could see how they get punished in here. You got a little flag going on right over here that is bearish, and there is a lot of trouble for them. Now, there's a head and shoulders in here, and I can actually illustrate for you how to measure the head and shoulders. So I'm just going to grab a tool right over here called a channel tool, and I'm just going to go from the neckline to the top of the head. I'm going to double this, and then I'm going to bring it down over here, and you could see that, well, it projects down to 83.5. It almost did that already, but I can assure you that the probabilities of it getting under 83.5 are pretty high when you look at that. And then when I look at this weekly chart, I think that, there's still a couple of more weeks on the downside. So this is a bad looking stock, losing 8% on the week on poor sales, even though their earnings beat. This is an important one to look at, Lowe's, because it has a bad week as they lose 5%. Their earnings missed, and this is a stock in big trouble. Now, why is it in big trouble? I've got a lot to teach you right here. Here, note this cycle pattern right in here, the rally and then the corrective period. That's right here. Now, because it was so steep on the upside and has what we call a right-hand translation, the odds were high it was going to move to a new high, and it did so. Once it breaks under this low, all of the time period here is left for a decline, as this cyclic family, or the harmonics that we look at, suggest that it is in a lot of trouble. Note the duplicate pattern right in here. It gets up and moves down and moves to a new high. So to put clarity in there, I'll get rid of all of that right in here. Strong rally, modest decline, move to a new high, breakdown. Strong rally, modest decline, move to a new high, and breakdown. It leaves all of this time into August to decline. And this stock, if you've loved it because it's been a good stock, I would unlove it right now because this one has got problems. Take a look here. As we look at the daily chart, you can see that the momentum has now turned negative. It's getting a little support at the 89-day moving average. Technicians will look at that, as you can see right over here, but we believe that it will, after this little bear flag gets built, it will resume to the downside again. Now, one stock that we have to mention when we mention Lowe's is Home Depot. Home Depot has managed to withstand all of the problems in retail because, well, there's a lot of demand in there for the service that they get when customers go in there who want to buy building products. And, of course, the housing market's been strong. But now we have a reason for concern when we look at this pattern. Here's the first reason for concern, only down 0.7% this week, by the way. See that rejection right there, that hanging man? It comes right in the middle of these fib extensions. That is a pretty good warning that this is over with. And with Lowe's having trouble, and for Lowe's, it's also about the fact that their customer service is said to not be as good. So that's a separate factor. This has no breakdown in here yet when you look at that on the weekly chart. However, when I look at it on the daily chart, we have a different story. And that is, we have several things to look at. First of all, an abandoned baby right there, which is quite negative. Second of all, a cyclic pattern which ended here and a rally which began that then abruptly ended on the abandoned baby. And this points way out here till mid-June. Note the support zone in here where it stopped. We think that this stock is going to get a big hit on the downside. First stop would be the 89-day moving average, really over here at about 147. So we see a 7 or 8 point immediate risk over the next several weeks in Home Depot. And this stock is really in, we think, some trouble, as maybe Lowe's is leading the way. It's been a stock that's held up, but the technical patterns are breaking down in there, and it's in the category of the worst of the week. Those patterns are bad, and maybe really for trading, it's one of the best of the week because we think that there's a pretty good potential that there's a short side trade in there that's going to pay you, and that's what we look, of course, as for the highest probability entries. And when we see breakdowns like that, and when it can't rally in a market that has been doing what the market did this week, Home Depot's got problems, and we think it'll be moving to the downside. That's the worst stocks of the week, maybe one of the best trades. Be right back with my short-term view for the coming week. All right, this is my short-term view for the coming week. I want to remind you that if you want to get our rankings and trade setups every single week, we put out posts every single week for the top 81 best traded stocks, futures, and ETFs. It's everything there that you could possibly want to trade if you're active in the markets, with our amazing analysis on 3 time frames and lots of notes to you and what we think are the most favorable setups. And if you want to try that, just send an email to slim@askSlim.com, and I'll send you a special half-price link. You could check it out for a month. You don't like it, just cancel it. And and I think that you will really find it to be very valuable information. So write me an email on that. First-time members only for level 3 services. All right, so what I want to look at here is the stock market. Now, like I said in the beginning of the show, I was pretty reliant on what is one of the most valuable patterns, and I showed last week in the show that kicker patterns tend to be highly reliable. Interesting, I've gotten a number of emails this week that said, well, the kicker pattern's no good, or it's been violated, or there goes the market to new highs, and a lot of negativity actually. It doesn't matter. I always believe what is the best risk rewards, and overall kicker patterns are highly valuable. They're highly reliable, and just because one doesn't work, it doesn't mean that they're no good. As a matter of fact, this one might just be a little warning as to the nature of the market going forward. But clearly this pattern has failed right now, no doubt about it, and our projection for the week was incorrect on the stock market. Now, we actually were about 60% correct for our members when we looked at the other 4 major markets, so total 5 major markets, we did pretty well. But in the stock market, we were absolutely wrong. Bond market, we didn't do that well either, because we were thinking of the inverse correlation of the stock market to bonds. And if we thought the stock market was going to stall, well, we thought the bond market had a little more room on the upside. Here's the S&P 500 chart. So what we are looking at here, of course, is our cycle patterns. I mean, that is the core of our work, and it's the way that I believe to best understand the movements within the stock market, within any market or within any stocks. Here's what we see right now, and you look at these patterns right in here. So that is the bigger patterns that we're looking at. And then there is a smaller one right there. I changed the way that looks because I have it looking the same way up here. So I wanted to, really get for you to be able to see what our projection is. Let me just come in here for you to see this a little closer so you could see what we're looking at this week. Now, I want you to look at the last pattern right in here. See the rally in here? It actually rallied way up to here. Normally, when it rallies for too long of a period of time, you get a quick move to the downside, and that is what happened. You can see that there. Actually, I thought this was the peak, and that's what messed me up a little there, but then it extended a little more and then had that big down day, which was pretty nice. Now, when you look deeper into this pattern, you can see that it was made up of 2 cycles. This is the ideal cycle right in there, and this is the actuality of how it traded. You could see that right there, because this is the sum of all of the cycles, and you could see the 2 smaller patterns right in there. So actually, you could see the smaller pattern back over here too, which is pretty clear. Now we got into this period where we got the 2 upside moves. Now, I didn't give the market credit for that. You could see that this was last week's resistance, which I left in there. I expected it to roll over in this period and then move down in here, have another rally, and then move down right there. That was my projection for last week. However, it moved to new highs and took flight, and that only changes the numbers. It doesn't change the pattern. So what are we looking for the next week? We're looking for a pullback into somewhere about midweek. The numbers for the pullback that we look at here are around 2403. That's the minor support right there. That's not much of a pullback. There's a possibility that the pullback drops a little bit lower than that, and the next support would be around 2394, which was interestingly the resistance of the previous week. So what we look at here, 2403, 2394 are the 2 important numbers. We will look for an early week to midweek pullback that doesn't get very deep, and then another move to the upside. That's this move right in here. That's that upward advance. And that should get you up in towards this fib confluence zone right over there. Now, there is a weekly fib resistance around 24.16, where it's just below right now. The daily confluence is up here at 24.24 to 24.29. We do not see it getting beyond there. And as a matter of fact, there's a significant period where we think the bonds are going to correct into this first to second week of June and then explode to the upside. That's where we think the decline is coming. We think that there's a ton of risk moving out 2 weeks and longer, but the next week doesn't have all that much risk. Again, what we're going to look for is a minor dip and then another rally, so that doesn't mean much change for the week, right? And then the risks really picking up as we move into the following week. We expect to do better in our analysis moving forward. Sometimes we get these time periods where it gets to be more difficult, but we have faith in our work and also in the experience that we gain helping us as we move forward. I hope you found this to be a great show and informative. I always want to share my 43 years experience with you and hope that the lessons that I learned can make you a better trader, be great tools for you to learn, and that going forward you are highly successful. Be careful out there, because this is one crazy world, and we're always wishing you great trading.
Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been